Hey, OB, would you consider the open on Met to be a hidden bull 180? Let's see. Open on Met. We can look at this like, because this was red first, and the green took it out. But it's also a bottoming tail bar plus. Remember, a bottoming tail bar is what I call a torpedo bar. That's your bottoming tail bar. A bottoming tail bar, by definition, has a small body, but the body stops being small. It becomes a bottoming tail bar plus or torpedo, and boom. And remember, to gain greater clarity, you can always remove tails. Don't forget that. Unless the tail is what you're playing, you remove tail. And so this becomes very clearly, it's a very powerful clearing elephant bar, boom. And OV, it's third bar, not a big bar. Stop on the 2 minute. No, it's not. You don't do any stop adjustments other than break even on leg one. So that's your entry here, profit, break even. Otherwise, how would you ever be able to live through a pullback, moving your stop up here or there? You'd get stopped out on every pullback and you would never get a whale. You would never be able to whale out on a play, or very infrequently you'd whale out. So you can't eliminate the possibility of a whale like that. All right, so I think what you're asking, Sophie, is that my maximum loss per trade is getting me out at a stupid location. Do I ignore it and go with a bigger? That's your question. Sophie, did I get it right? When my maximum loss per trade is in a stupid location. Like, I know this is dumb to be getting out here, but that's where my maximum stop is. Should I do the maximum stop, or should I do a bigger maximum stop? Well, if you were allowed to do something bigger than a max, then would it really be max? Right? It wouldn't, right? Maximum means maximum. It doesn't mean maximum sometimes. That is your ultimate maximum. It means that if God told you just a little bit more, you'd have to say, with all due respect, sir, I can't. Let me give you something else, though. If you are getting stopped out at maximum, let's say right at the 200, the flat 200 or something like that, right? But your maximum says you got to do it. You have to get out there, but you should have a re-entry plan if that level that you feel makes getting out there stupid, if it gives you something powerful to get back in again, if it confirms that you shouldn't have gotten out and that you should be in, then take a second trade. And now you have a brand new max on that. That's a brand new trade. This happens all the time, guys, all the time. So let's say on this thing I taught you here, boom. All right. I catch this late. So I like to catch it like here, but I catch it late and I still want it anyway. So I get in right at the bottom, short. Now I'm hoping that the 200 bounces this so I can get the second leg. I can get in on the bounce to get the second leg, right? So I place orders. Let's say I start at a third. This bounces, and I'm like, oh, wait a minute. Uh-oh. It's almost getting too much. Now, because it got to my top level, usually it doesn't. But because it took out all the levels, now my maximum is close. So let's say this would never happen to me this easily, but let's just say that it did, and my maximum is now here. It nicks me out, and then does this. Boom. I'm going back in here, brand new trade, stop there. So if I get stopped out at a stupid level, and I should do this higher. So if I get stopped out at a stupid level because my maximum demands that I get out, almost right away as I get stopped out, I get a powerful sign that I should still be in. I'm going to take the second trade in that, and that gets me another maximum. So in this way, if this keeps going, I'm already out, but it's not a great area to be out. But if it keeps going, I save myself. If not, I re-enter. Abhinav is asking, Oliver, if I take all of my profits in a trade at 2-1 levels, 2-to-1 profit Risk ratio? Yeah, well, if your accuracy supports that, that's fine. You're a winning trader, right? So for every $1, you lose 50 cents, but you win the dollar way more than you lose the 50 cents. That's a winning strategy, of course. But, I see what you're asking. You're asking to cut it instead of letting it try to be more than 2. I think that what can fool you are periods like August that can fool you into believing that that's what you should do all the time. There are market environments where that will work more often than not. But I am telling you, cutting your winners short is basically after you get losses under control, devastating losses under control. There are 2 things that take traders out. Allowing devastating losses, right? You got to work on devastating losses first. You got to remove those from your life. Second thing is once you've got your devastating, you never do a devastating loss. That is totally out of your system now. Once you're there, the thing is usually not letting your profits run. So you got the bottom of your bucket sealed up. It's no longer leaking water. Now you can't just keep dumping the water and never letting your bucket get full. There was a hole in the water and nothing ever accumulated. So that you got to fix the hole first. Once the hole in your bucket is fixed, when you put a little bit of water, if you keep pouring the water out every time a little bit gets in there, you're still going to be loser. You got to give the water a chance to accumulate all the way to the top every now and then. And the only way you're going to do that is you got to let it run, get out of the way. I've always told you this. Your best trades are when you're in the bathroom on the toilet because you're not there to tinker. You're not there to mess with the trade. That's your best trades happen in the bathroom. I'm telling you, because you're not there to mess it up. And so you got to get to that bathroom mentality, that bathroom sitting on the bathroom toilet mentality when you're in a trade. Don't take your laptop there. No, you're going to mess it up.
Norma's asking, so you enter the Fab 4 zone. Yes, you can enter the Fab 4 zone if, for instance, here is your Fab 4 and you have crashed like that into it. Yeah, I can enter there waiting for the bounce to get through. But really, the one that I'm looking for predominantly is the crash into the 200. That's the main one. But I'll do the crash into the Fab 4 as well. But the main one is the 200. Let's take a look at PayPal, and then I'll take a look at Starbucks for a second here. With PayPal, I want to look at the 5-minute and show you the same concept. Do you see the concept on this 5-minute chart? You see it? So you see it starts well above. It crashes into the 200, weakening it at its foundation. It bounces. The second bar bounces. And what's that sound? What's the sound of what happens next? Give me the sound. Somebody type it. There we go. Oh, it's quick. That's crazy, right? That's a good question. Let's talk about your stops. So I teach you when you go into something, your stop should be above. What if that's too tall? Now what's your stop? If you can't do the event stop, what's your stop now? Not necessarily. Nope. There's only 2 stops, guys. There's no half stop or quarter stop or where'd you get that from? What program are you in? There's only event or maximum. There's no 33% stop. Where did you get these things from, guys? Are you moonlighting on me and learning from someone else? Is that it? No. You've got 2 stops, event or max. Event or max. So if you go in here and you can't do this because it violates your maximum, you must go down, find at what point is it maximum? All right, that's my maximum loss per trade. All right, I can deal with that. Now, here's where I think some of you are getting mixed up with the third. As long as the maximum is not down here, you can do it. So if you can't get at the tippy top, what portion of the bar do you want your maximum to be? Top third. That's where the third is coming from. There we go. I mean, you guys are aristocrats here, huh? Look at these aristocrats. Aristocrats. Yeah, see? You got a bunch of aristocrats here. If we can't get our stop there, we find the maximum, and if it's in the top third, we can do the play. If you can't get it in the top third, then what you can do is skip the initial. Do you understand? And wait for the add. Does that make sense? Because you don't want to get knocked out on the bounce, guys. That's all I'm saying. Right. Now, you might miss it. Those of you who have been with me for a while, you know if I get in, I have orders up the bar. So any bounce, my orders are there in advance. So I'm waiting for it to move up into my orders, and boom. Many of you are going to look for a color change. In the case of this 5-minute chart, your color change comes here. That's when this was green and boom, green is gone. Here's a secondary color change here. I don't know if you see it. And basically, the rest is history. Color change here too. I'm not saying I do want you to see these intra-bar color changes.